Hi, I hope you liked the video that you have just seen. So very quickly, I will be starting the webinar very soon. So before I start off, for those of you who might have attended my webinar before, you will notice that the background has changed for today's webinar. And the reason is because I'm actually in the midst of attending our company retreat at an Airbnb apartment in some part of Singapore. So maybe just let you take a look at few of my colleagues who are here. So this is Ping Chuan and Gladwin. Yeah, so they will be helping me manage the webinar later. So sorry, just let me set up the camera again. All right, so thanks again for joining in the webinar today. And as you know, today I'll be sharing with you about how to use price action strategy to try to identify entry, stop loss, as well as profit taking levels. And before I start off today's webinar, for those of you, I've seen a number of you saying that you have problems with the video. Sometimes it freezes, sometimes you lose the audio or you lose the video. So if that happens to you, you just have to you will see a reconnect red button right at the top of your webinar screen, and you just try to click on that and the whole thing will refresh, and your video and audio should resume thereafter. But of course, you might lose a few seconds of my speaking and the video. All right, so I'm now going to turn on the share screen so that we can go to the slides and we can kick off today's webinar. All right, so just give me a few seconds. All right, so I hope you are able to see the slides over here. So today's webinar is going about finding the best trading entry and exit with price action strategy. But of course, in reality, there is no such thing as the best. There's always pros and cons in trading. And we are really trying to find the entry that is most suitable for the kind of strategies that you might have. Okay, and in today's webinar, the agenda that I'll be covering, of course, two of my favorite trading setups. And of course, I'm not just going to share with you what the setup is, but to actually explain to you the rationale of why I actually think that those are good trading setups to look at. And of course, I will be talking about a few strategies in terms of how you can potentially set your stop loss level, and as well as 3 ways for you to think about taking your profits. And of course, finally, I will end off today's session before the Q&A. Of course, I will end off with a demonstration of some trade planning with real charts. All right. So before I start off, let's just have some activity to get you guys going. So it's poll time, and my colleague Gladwin will actually start a poll right now, and to just let me know and share in the poll, do you have a stop loss plan whenever you enter a trade? Okay, so for those of you who has actually traded before or invested before, just fill in the poll and let me know what's the percentage going to be like. All right, so meanwhile, let me just go through some very quick important notes or disclaimer about today's webinar. So in today's webinar, of course, other than sharing with you trading knowledge, I will be going through some live charts as well. So I just want to make sure that you understand that I'm in no way trying to propose or any kind of trading ideas to you, but in fact, to just use those charts to illustrate certain trading knowledge to you. Okay, so that's the main thing I really want you to be able to understand, okay, when you participate in today's webinar. So before I go into today's topic officially, some of you might have already known me from previous webinar. For those of you who are new to today's webinar, first time listening to me and watching me live on webinar, let me just spend 1 to 2 minutes to quickly share with you my background. So ironically, although I'm doing a webinar on technical trend trading or technical analysis in general, I actually started off as a passionate fundamentalist about more than 10 years back. And I was a very avid student of the art of value investing, and I read up Warren Buffett's books and stuff. But about 8 years to 9 years back, okay, it was really by chance that I got in touch with technical analysis, and subsequently I became a very devoted technician, and I was even the chief technical analyst for OCBC Investment Research for about 7 years. And about 2 years back, okay, I finally decided to leave the bank and came out and started TraderWave, as you would see at the bottom right corner of the screen right now. And I decided that I wanted to become a visionary technologist in a way which I can use my domain expertise in the field of trading financial markets together with technology, and to really build a very nice and good trading workflow solution for global retail traders. All right, and that was the reason why I actually left them. And when I first started TraderWave, my vision was really and motivation was to empower everyday people like yourself, for example, especially if you are a part-time retail trader, with easy to understand trading knowledge. That's the reason why you will notice that on TraderWave's blog, I often share very good articles about basic trading knowledge, as well as to formulate trading system with the best trading best practices and to impart them to you through sessions like this webinar. All right. And of course, building very easy to use trading workflow tools like the TraderWave app, so that we can help you be a more efficient, proficient trader with, of course, the ultimate intention of helping you become a profitable trader over the long term. Right, so that's the goal and the mission that I have when I started TraderWave, and that is what we are pursuing every day with my team of colleagues. So if you are keen to just take a look at what TraderWave does from an application perspective, just feel free to go to this web link, and you'll be able to access the demo, which you do not have to install any application at all. Just go to the link and you'll be able to try out the offerings that we have on traderwave.com, the app. All right, so let's officially kickstart today's webinar. So as we can see, the title of the webinar is about using price action trading strategy to analyze and to find good entry and exit levels and positions. So essentially what price action trading strategy is about is actually analyzing the market and make subjective trading decisions using price movements rather than relying on technical indicators or overlay. All right, so in today's webinar, I will be focusing on just looking at how price action in general without using any form of technical indicators or overlay at all. So if you are keen to use technical indicators or overlay, you can actually use them on top of the price action strategy that I will be sharing with you today. All right, so in order for me to move into the kind of trading setups that I would want to share with you, I think it's important that for some of you who might want to be able to recap the key things about price action trading, which in my opinion, the most fundamental aspect of price action trading, it's about the use of trend lines and support resistance to help you analyze the market and make solid decisions. So let's just do a quick recap of what are the important things to know about drawing trend lines and identifying support and resistance levels. So trend line. This is an example of an uptrend line where, as you can see at like 1 and 3, you can actually see that there's a bounce and there's a line going up. So this is how we identify or draw an uptrend line. And this is an example of how we actually draw a downtrend line, just to refresh your mind about how downtrend line works. And I just want to quickly recap as well, as I've shared in previous webinar about resistance turns support level. So for example, when a resistance has finally been overcome, and when it comes back to that level will now become a support level. All right. So vice versa, if a support has been broken, the next time the price comes back to the same level, that level will become a resistance. Okay, so basically these are the two main things that I will need you to recap and to understand, because the strategies that I'll be sharing with you later will be mainly based on these two price action phenomenon. So now, before I actually go into sharing with you what exactly are my trade entries or trading plan, I also want to quickly share with you some basic understanding of what trade entry is, what stop loss is, and what profit taking is. So the basic rationale of a trade entry is this. In my personal opinion, you should consider a trade entry if, firstly, you believe it could be any kind of analysis that you are doing. It might not be price action, it might not be technical analysis, but whenever you decide to consider having a trade entry, you must first believe that the price is likely to move in the direction of your analysis soon. It shouldn't be much later, it should be soon. All right. So if that's the case, that is the first criteria to meet if you want to consider a trade entry. And secondly, you have to believe that based on the strategy, based on the analysis flow that you have, you believe that the price is likely to reach your ideal profit target within your trading horizon. All right. And that also with the prerequisite of without first touching your stop loss level. All right. So this is what I'm going to do. I'm going to share with you my first trading setup based on the entry entry motivation. Then after that, I will share with you what stop loss means. Then I will use this same exact trading setup to explain to you how I will set the stop loss. And then after that, I will share with you what are the 3 ways I will. It's a good way for you to consider taking profits. And then I will again use this first trading setup to explain to you. After which, I will actually move on to my second trading setup and straight away share with you how do I look at the chart and consider the entry, the stop loss, and the profit taking levels. All right, so this is the first trading setup I'll be sharing with you. Now, in terms of entry wise, this is you see the blue line over here. This is where the it's from my way of looking, it's really a good entry setup to be looking at. Okay, and I'm going to explain to you the rationale why. Right? So can you see over here that there is this blue line that happens to be the previous resistance that was taken out, and subsequently it became a support level, bouncing off first time, and then after which it bounced off the second time, to which the current baby blue line is. All right, so that's its resistance turn support level. So you have one strong support level over there, which it bounced off. And secondly, you would also notice that there is a very firm uptrend support that happens to just run through the base of the current long green candlestick that we are looking at right now. And that is already the third time that is bouncing off. So we have 2 strong support level that is helping to form the base of this current green candlestick. And as you can see over here, and a bonus point about this entry is that, which I wouldn't have the time to share with you about candlestick pattern, is for those of you who already know what candlestick pattern is, this is actually a bullish reversal candlestick pattern, which is what we call the bullish engulfing pattern. So in a bullish engulfing pattern, usually it suggests that there is a good chance of a reversal. And in this case, it is likely that the price will continue to go up from here. So as you can see here, in terms of trading setup, in terms of the rationale of entering a trade, there is 3 strong cases to support the entry of the trade at where that baby blue color line is currently at. All right, so that's the entry setup for this idea. And next, let's take a look at what is the basic rationale of a stop loss. So in my opinion, as a trader or even as an investor, you should always consider placing your stop loss at a level where if the price falls to the level, you are objectively certain that you are wrong on your analysis. So for example, if you decide to buy a stock A and you decide to enter right now, and you put your stop loss at a level maybe about 10 cents below, so what it means is that if the price, instead of going higher from here, it drops by 10 cents and reaches that stop loss level, you are pretty sure that the price is not going to go higher from there. And that's the reason why you take a stop loss on it by getting out at that particular level. So Dr. Van Ketap, who is a very famous trading psychologist, he actually said this before. Knowing when you are going to exit a trade is the only way to determine how much you are really risking in any given trade or investment. If you don't know when you are getting out, then in effect, you are risking 100% of your money. And that is one of the key problems that many retail traders and investors have. When they get into a trade, then they never consider about the stop loss where they are going to get out at all. So in effect, according to Dr. Van Ketap, you're potentially risking 100% of your own money. Okay? So if you take a look at how can we actually set a stop loss based on the same trading setup that I've just shared with you earlier on. So as you can see again, the baby blue line is where we are looking to enter after that long green candlestick appears with a bullish engulfing candlestick pattern. So ideally, this is where the stop loss level is going to be. And the rationale is this. As we can see that previously, that the base of that candle was where the two strong support level are. So think about this. If the price doesn't continue to go higher from here and it pulls back and at the same time breaks both the horizontal support level as well as the uptrending support level, if both are being broken at the same time, it suggests that very likely the price is not going to go higher from here anymore. In fact, it might be reversing and should be going down from here. And that's the reason why we should actually get out with a stop loss. And that red line is where the ideal stop loss level is going to be. Right? So, however, you might have a question in your mind which I want to address it right now. You might be asking me, so Philip, how far away should I put the stop loss level away from that lowest point or where that support is? And my answer to you is there is no best distance to put. Okay, in my view of trading, there are always just pros and cons to how you decide to make a trading decision. So in this case, what is the pros and cons of putting your stop loss closer to the support level or further away from that support level? Okay, and this is the way I look at it. The closer you put your stop loss to your entry price or closer to that support level that you're looking at, the more likely you will get stopped out, because in the event where there's volatility, you might just get hit on the stop loss and then the price will start to go higher from there. Okay, so that is the downside of it. You are likely to get stopped out if you put your stop loss too close to your entry price. But at the same time, for those trades that you don't get stopped out, okay, when you put your stop loss very close to entry price, you will end up with winners of high relative returns, okay, compared to the risk that you took, right? So let's take a look at now at the rationale of a profit-taking level. Later on, I will show you more examples using the live chart. So just run around with me on this knowledge part first. All right, so in terms of profit-taking, this is the way I look at it. You should consider placing your profit-taking level, okay, at a place where if the price reaches that level, you objectively believe that either that particular price swing has reached its maximum level in the current move, or secondly, if the price has started to show signs of a trend reversal in the other direction. Okay, so these are the two conditions that I usually use when I try to monitor my open trades and decide when I should actually take a profit. So today I'm going to share with you 3 ways to potentially take a profit. Now, don't get me wrong, there are more than 3 ways to take a profit. In fact, if you are already a more sophisticated trader, you have already built up a strong foundation of trading, there are actually many more ways of taking profits. But in order to help make things easier for you, I'll be just sharing with you 3 of the most basic ways of taking profits, which I think will help new traders potentially like yourself. All right. So the first way you can consider taking profit is take profit at the next key support or resistance level. If you have a long trade, you should think about taking profit at the next key resistance level. And if you have a short trade, you should consider taking profit at the next key support level. Secondly, you can also just simply take profit using a fixed risk to reward ratio. Right. For example, if you got in a trade at $1 and you have a stop loss at 90 cents, which is a 10 cents risk, all right, you could say that, all right, I'm going to take my profit when the price reaches 120. So that is a 1:2 risk reward ratio. So you can just simply use this way to set a profit target and just adhere to that target. All right. And of course, the third way, you could potentially take profit based on the trailing stop being violated. All right, so I'm going to show you example what this means. So if we go back to the first trading setup about profit taking, remember, baby blue line is where we enter the trade. Red line is where we potentially place our stop loss. All right, and now if let's say the trade is starting to work out as what you can see over here, 3 ways you can consider taking profit. The first way is you identify where is the next key horizontal resistance level. In this case, it's about $8.80. The other way is to consider the risk-reward factor, which is you just set it at the 2R multiples, which is basically risk-reward ratio multiples. Okay, so as you can see in this case, if you get out at somewhere around 860, it is about the distance between your your profit-taking level to your entry level is about 2 times the distance between your entry level and your stop loss level. And that is the 1:2 risk-reward ratio, right? Alternatively, if you are generally more experienced, then you can actually think about using trailing stop as well. So what happens is that your initial stop is the red line, but as the trade starts moving in your direction, you can continue to move your exit level from the red line to the next blue line, to the next blue line, to the next blue line as the price starts to get higher and higher. Okay, so now I will explain later on what are some of the key criteria you should be looking out for to decide whether should I use a key horizontal resistance to take my profit, or should I use the certain multiples to take my profit, or should I use trailing stop. So what I'm going to do right now is I'm going to show you the second of my favorite trading setup, which you could potentially look at to enter a trade. So when I look at charts, in fact, my practice is that I have 100 over charts on my watch list, and that is just SGX listed stocks. And on the hundreds over of charts, I usually like to scan through all the charts, okay, whenever I do analysis on them, and like to look for patterns that adhere to the kind of trading setups that I'm looking for. And this is actually one of the type of trading setups that I really love to see. And as you can see over here on this chart, you will notice that it has been going downtrend for about about 1 year generally. And at the same time, over the past about 6 months, the price movement has been consolidating into a narrower and narrower range. In fact, whenever I see price movements getting into a narrower and narrower range, that is when I will become very aware of this chart, and I will take particular notice of this chart. And the reason is because once it starts to get into a narrow trading range, I want to wait for the point where finally it bursts out of that trading range, because that usually is one of the best time to actually enter a trade. And that is also one of the best time to actually set a stop loss that is generally not too far away from your entry level. So let's just take a look. So if we assume that the price breaks out from the current consolidation with the arrow heading towards that baby blue line, and that's where we want it to be our entry level, okay? Because that once we break it, that's actually a good time to actually enter the trade. So if that's a good time to enter a trade, because we are expecting that the price will continue to move higher from then on to maybe about $2, $2.20, or even $2.40. All right. So that's the rationale of deciding to enter at this point once it breaks above that red downtrend resistance. And as you can see over here, this is where that bullish break of the key downtrend resistance happened as the price crossed over the line. At the same time, we also noticed that it was a strong rebound of a key uptrend support. So there is two evidence that help us support that the case that very likely the price will continue to go higher from here. So now if we decided to enter this trade, obviously we need to think about what if this trade doesn't work out. And that's the reason why we have a stop loss, and we need to learn how to determine a stop loss. So in this case, where would be a good idea to put the stop loss level? So imagine this. If the price has crossed above the red line, and then the price falls under the red line again and cross below the green line and cross below the minor horizontal support that you might be aware of right now, and touches that support level, what does this say? It means that very likely the uptrend is not going to materialize anymore, and it might continue its downtrend from there. And that is the reason why we actually have our stop loss level at the red line that you see over here on the chart. All right. So now if we have determined a stop loss, and obviously we will have to use the stop loss and the entry level to size the trade, which I do not have the time to explain today, but I will make it a point to explain about how to size your trade in future webinar. So now the next most important thing is, of course, once you get into a trade at the baby blue line level, and then you have a stop loss at the red line, the next thing is, once the trade starts moving in the direction, you need to think about where to take a profit. All right. So based on what I've shared with you earlier on, one of the ways you can take a look at where is the next key horizontal resistance. All right. So if you think that a key horizontal resistance next is at about 240, that is where potentially you could be looking at taking a profit if it touches that level. All right. Alternatively, you could be looking at a 1:2 multiples, or you could be looking at a 1:3 multiples. No right or wrong answer. So if based on a 1:2 multiples, then your profit taking level could potentially be at 220. All right. Now, if you are more sophisticated, you understand what you are doing, and you have more time to keep track of your open trades, you could potentially look at using trailing stop from then on, trailing as the price gets higher and higher. All right, so I have shared with you two of my favorite trading setups and how you can actually apply the trade entry plan, how you can decide where to put that stop loss, and what are the 3 ways you can think about taking profits. And now my recommendation for you is this. If you are generally a new trader starting to learn how to trade, all right, my suggestion for you is you should actually focus more of your effort on the skill of placing your stop loss, okay, as well as on the act of cutting your losses short. The biggest problem I've noticed in retail traders is that even when they understand how important stop loss is and they actually have a mental stop loss, but when the price dropped to that mental stop loss level, many of them actually just could not, okay, take the action and just cut the loss. And ends up, they will see the price running further and further away in the opposite direction, and they start to see their losses mounting. All right. So I want you to focus on the skill of placing your stop loss and the act of cutting your losses short for new traders. And in order to reduce the cognitive load it has on your emotions, on your psychology, my suggestion is, as you are focusing on the skill of placing your stop loss and the cutting the stop loss, just simply set a predetermined profit taking level, either using R multiples of around 2 risk reward ratio to 3R, okay? And then, or you can base it on a clear support resistance level. Okay, that's an easy way to get you started off by focusing on stop loss and let your profit taking be a secondary outcome. All right. But if you are already a very experienced trader and you are already very familiar with setting stop loss and you are already very disciplined about taking stop losses, acting on the stop losses, and it has become second nature to you, my suggestion for you is that you can actually start to use a combination of trailing stops with target profits to actually optimize your exit strategy, which will not be the focus of my discussion today. I'll probably reserve it for future webinars. All right. So this is the thing. If you're a novice trader, please take note of focusing on your stop loss. And then if you're an experienced trader, when cutting losses has become second nature to you, start to learn how to optimize your profit taking levels. All right. So now I'm going to run through some live charts with you. Of course, live charts, I do not mean that the stock is still trading at this point in time right now. So again, I'm just going to use some of the SGX stocks to run through with you. Live charts as in, I'll be using the TraderWave app based on the latest price to show you how I usually will screen to look for trading setups. And of course, once I find a good trading setup, how do I actually plan for the entries and the exit? All right, so this is the TraderWave app, as you can see over here. I hope you can see. If not, just feel free to let me know if you can see in the comments. So this is the TraderWave app that we have built at TraderWave. So I've actually run through the stocks earlier on this afternoon, and I've basically shortlisted about a few stocks. Okay, so we can just take a look quickly on how I would actually look at the trade. So this is an example. This is Accordia Golf Trust. So as you can see over here, we can actually notice a fairly strong uptrend support over here, and the recent gap down has actually comes to this point, and it seems like the fall has started to moderate. At the same time, we would also notice that there is a horizontal support level, okay, around this region, as you can see over here. Okay, so this could potentially be a strong support level as a horizontal support level and uptrend support level. So when we look at the uptrend level, if we bring out a parallel line, you will notice that it seems to quite follow a very nice parallel channel from here, which means that potentially there is a chance that the stock could rebound from here. So let's assume if we want to enter the trade from here, this is one way that we can go about doing it. In fact, we have built this feature called the Trade Tracker into it, where you can actually simply just right click, okay, go to this track your trade, click on it, okay, and you can actually put in the entry level, which at current closing price, assuming that we are going in at the current closing price. And then if we are to assume where a stop loss is going to be, based on the key support level of about 69 cents, maybe we could put the stop loss at something like 0.67. All right. So based on the target level, if we think that the stock is likely to go back up to the upper channel boundary, it could reach somewhere in the range of about 84 cents. So we could potentially just put it at 84 cents. And this is how you can actually And of course, once you size your trade and you put in the number of units, you can actually just put a tick, and immediately will show you where your entry level is, where your stop loss level is, and where your likely profit taking is. So as the candle starts to develop from here, the markers for the profit taking and the stop loss will move across as well. And in time to come, very soon, in fact, within the next few weeks, we should be launching the technical alerts feature, which you can actually set alert on either your stop loss level or your profit taking level, so that you don't have to keep on coming back to monitor whether your price has touched any of this level. In fact, you will receive an alert or notification to tell you that when the price touches either of this level. So that should help you save a lot of time. So you see, this is one way that you can actually plan for a trade entry, determine where to put a stop loss, as well as where potentially you can actually take a profit. All right. So let me just go through one more chart. I realize, let me go through one more chart with you, as we still have quite a bit of time. So let's take a look at the next chart over here. It's Bousted. Okay, so what's interesting about this particular stock is this. After the very sharp fall previously, all right, it has gone into a sideways consolidation. All right. So as it goes on a sideways consolidation, there is this very gentle uptrend support. You can see that it has already been bouncing off for a number of times. At the same time, there is also this downtrend resistance. Okay, that has failed to overcome for about 3. Now it's the 4th time now. So as I said earlier on, one of my favorite type of trading setup is when the price starts to go into a very tight, narrow range. All right. So this is very soon there's a possibility it could start breaking above the red downtrend resistance. Either that, of course, it could be breaking down the green uptrend support as well. So in the event where either happens, this could potentially be a long trade or a short trade. All right. So let's say, for example, if the trade, the price decides to break above the red line, and let's say it closed at about 91 cents over here, and we decided to get into this trade. So we just have to go to the trade tracker, put it at the 91 cents. Okay. And in this case, where would a good stop loss be? All right. So in this case, a good stop loss could be either somewhere around between 85 cents to about 83 cents region. So in this case, let's just put the stop loss at about 83 cents. Remember, stop loss level is a level where if the price reaches that stop loss level, we objectively wish to conclude that very likely it will our idea is not working out anymore, and that's why we get out with a stop loss, right? So if let's say we put it at 83 cents for this particular stop loss level, and a target could potentially, if we just want to use, for example, the next key resistance, that could be somewhere around 97 cents region. All right, so based on this factor, you can just put it in. All right, so you will notice that the blue marker is where you enter, where your stop loss is about 83 cents region. Now, do you notice that actually the risk reward ratio is about 1:1? So generally, my recommendation is not to get into a trade if you realize that the risk reward ratio is anything less than 1:2. All right. So in this case, either you can decide that maybe this is not a worthwhile trade to get in because the risk reward ratio is not that ideal. Either that, or you could be looking objectively again to see, is my stop loss too far away from the entry level? Okay, do I need to wait for the price to come to this level to know that I'm wrong? Or is it that I actually set my stop loss too far away? Because as you can see over here, the uptrend line is actually at this part here. So if we have our stop loss just below this lowest point over here, okay, can we actually make the risk reward ratio more worthwhile? Okay, so this is where the resistance is. Okay, is it more worthwhile? So in this case, you will realize, hey, actually the risk reward ratio is still just slightly over 1:1. So which means in this case, after doing the analysis, maybe it's not worthwhile getting in anymore. So this is probably a trade that after doing the analysis, you might want to avoid getting in. All right, so now let's take a look at the next chart. CapitaLand Mall. Okay, so as you can see over here, this is a stock that has been trending sideways for many years. Okay, so I'm sorry for those investors who have invested in these stocks for the past 8 years. Unfortunately, it seems like your returns is not getting anywhere except for those dividends that you could have received along the way, if there's any. So as you can see over here, it has been going on a sideways consolidation for a while. But if we zoom in into the more recent times, you will notice that it has a very long-term gentle upslope from here. But if we go into a more shorter term time frame, for especially for swing traders, okay, you will notice that it has been, okay, forming a support level around this region, and at this moment it seems like it's stabilizing around this current level. And at the same time, you would also notice that there is a pretty strong resistance turn support zone around the $2 whole number psychological level. Okay, so which means that potentially this could be a place where it will bounce off both the uptrend line as well as the horizontal line and potentially head higher, either towards about 217 region, okay, or maybe even 225 region. All right, so if let's say you think that this is a worthwhile trade to get in because it looks like this is a very solid base where it is likely to bounce off from, and this is where of course you can actually start doing a trade based on the last closing price of 204. If you decided to get in, let's say at the current closing price, and you have a stop, and of course placing a stop loss. In this case, we notice that the key level is about $2. So naturally, your stop loss level has got to be below the $2 level. Okay, and maybe we could be looking at somewhere about 197. Okay, and target, if we put it at about 217, where the next key resistance is. Let's take a look at whether this trade risk reward ratio is worth taking. All right, so you will notice that based on our planned entry price, based on our stop loss level, and based on the next key resistance, you will notice that the risk reward ratio is about 1:1.9, which is very close to about 1:2. So this is actually potentially the kind of trade you could be looking at. All right, so of course, if you decide to get into trades like this, please make sure that you follow and adhere to your stop loss, because if the price falls from the current entry level to the green line, breaks the green uptrend line, and then goes to the horizontal support at $2 and break it again before heading down to your stop loss level at 197, it very likely suggests that your trade is not going to work out anymore. And if it's not going to work out anymore, you should simply just get out at your stop loss level, recoup whatever capital you have in this trade, and then look for the next best idea. All right, do not hold on to your trade that has crossed your stop loss level, because there's huge opportunity cost to doing that. All right, so come, let's take a look at more examples. So the next example we could potentially look at is Frasers Commercial Trust. All right, so in this case, I've already drawn some lines over here. All right, so if let's say we are taking a look at what has happened over the past 1 year, all right, we would notice that there has been historically over the past 2 years has been a very strong resistance at about 143 cents region. So already for the fifth time, is coming to the sixth time, it failed to clear the 143 key resistance. However, at the same time, you will notice that since the March this year, the bottoms has been getting higher and higher. In fact, it has bounced off a number of times at this green color uptrend support line. So it has already bounced off 3 times. And one thing you would have noticed is that the volatility of this particular stock has been getting lower and lower, which means that it's getting into a tight, narrow trading range. So which means that potentially over the next 1-2 weeks, maximum a month, we could see the price either breaking above the 143 cents key resistance, which is definitely a very strong bullish sign. Either that, or it could break down that green color uptrend support level. All right, so let's just assume that if this trading setup of mine, which is a favorite setup of mine, if it decides to break the 143 cents region over the next few weeks and closes at about, let's put it at 145 level. All right. So if it decides to break above and close at 145 level, that is a trade we would like to take, because this is the kind of setup we are looking for. All right. So if we decide to enter the trade at 145, okay, let's first establish where a potential stop loss is going to be. So a potential stop loss has, of course, got to be below this green uptrend support. Okay. So we could potentially look at having the stop loss at somewhere around maybe 130.37. Okay, if we put it at around 137 as the stop loss level, and profit taking level, we could be looking at the next key resistance over here. All right. So if based on all these criteria, let's take a look if we decide to consider this trade. Okay, going in at about 145, having a stop loss at about 137 region, and a target of about 158. Okay, what would be the risk reward ratio like? It's about 1.6. Okay, so in this case, is it something that you want to get into? And is your stop loss too far away? Okay, should we actually have room to put it nearer without getting whipped by the volatility of the stock? If there is, if about 1.7, yes, if you really seriously want to get into this trade, then there is one potential as well. Okay, although my suggestion, as what I've said earlier on, it should ideally be something somewhere at least about 1:2 to 1:3 ratio onwards. All right, so let's take a look at two more stocks. All right, so Golden Agri. So you can see over here, Golden Agri has been trending lower pretty consistently over the past 5 years, in fact. All right, since 2012 all the way until 2017 now. However, we would also notice that since August 2015, it has been trending up higher in a mild, gentle uptrend channel. All right, as you can see, the price has bounced off at least about 2 to 3 times on this uptrend, the base of this uptrend channel. Okay, so right now the price has actually started to cross the downtrend, the red downtrend resistance, and is coming back to the uptrend green line again. So let's say that it started to bounce off the green line. Is this potentially a trade that we might want to consider getting into, because we are expecting it to bounce off the green uptrend support and probably head back towards the upper channel boundary, all right, of this particular move. All right, so assuming if, let's say if the price starts to bounce off at current level towards 41 cents again, and we decide to get in at about 41 cents region, and where is the ideal stop loss to put? Okay, so it could be somewhere below the green line and below the recent minor lows. So if we put it at about 37 cents region, okay, this could potentially be where our stop loss is if you're talking about swing trade. And then hopefully that the price, when you get it at 40 cents, it will continue to go higher towards the upper boundary, which in this case, we can set it at somewhere around 51 cents region. So again, let's take a look to see if the risk reward ratio is actually worthwhile. Having an entry level at about 41 cents with a stop at about 37 cents and a target at about 51 cents. Okay, so in this case, is it worth it? Yes, it's actually pretty worth it. If the way of you determining the entry level, the way of you deciding where the stop loss is and where you think a realistic profit taking level is, in this case, this is a key support and resistance level, as well as the near to where the upper channel boundary is. So with a risk reward ratio of 1:2.5, this could be an idea or a trade that you could potentially be looking at. All right, so lastly, let's take a look at the last stock that I have actually shortlisted, which is this Sheng Siong. So Sheng Siong has been going up in a very beautiful uptrend channel, okay, for a long time now. That's about 5 years to 6 years already. And recently, it has, in August this year, it has actually bounced off a very key resistance turn support level, okay, for the second time. And at the same time, it is showing signs of bouncing off the key uptrend support over here. Okay, so the only thing that is hindering its move from here is potentially this downtrend resistance, where we see over here. Now, the question is, are you willing to take a risk on this trade by getting in now? Because you could be expecting it to go higher from here. And if it goes higher from here, the first key resistance we are looking out for could potentially be at about 110 region. And if it were to go even higher from here towards the upper boundary again, which it has already happened quite a number of times, we could potentially be looking at a profit taking level of about 122. All right. So again, there is no right or wrong answer whether you should be taking your profit at 110 or you should be taking your profit at 122. It is just simply a matter of pros and cons and the probability as well as the reliability of the trade happening out for you. So let's say if we decide to enter over here, all right? So based on the current levels, that's about 96 cents region. And of course, where is a good stop loss to be? Okay. I think ideally somewhere below that key resistance turn support level, that is where a good stop loss level could potentially be. So let's put it at just about 88 cents region, because if should the price move to 88 cents, it would have to first cross below the long-term key uptrend support, as well as it has to cross below the key horizontal support at about 90 cents level. All right, so if we have a stop loss at about 88 cents and an entry price of 96 cents, so let's decide if, let's say we want to assume that it will go up to the upper channel boundary. Okay, and so we just remove this. Let's take a look whether the risk reward ratio is actually worth it. So let's say the entry level right now is 96 as what we have decided earlier on. And we place the stop loss at about 88 cents region. And target at about, let's just be more conservative. We just put at about 120. All right. So let's take a look whether the risk reward ratio is actually worth it. Okay. So as you can see over here, it's exactly a risk reward ratio of 1:3. Okay. So again, this could be an ideal trade to get into. All right. So once you get into a trade, just continue to use this trade tracker feature to monitor visually on the chart whether the candle or the price is getting near to your profit taking level, or is it not working out and starting to fall towards your stop loss level. Either case, it touches your profit level or stop loss level. Follow your plan, follow your strategy, be disciplined about it, and get out at your predetermined levels. All right, so that's all I'll be sharing with you on the live demonstration. So what I'm going to do right now is I'm going to head back towards these slides. All right, and let's see what's next on the agenda. All right, it's survey time. So I have a favor to ask of you, okay? Is that we have actually prepared a very short multiple choice survey. So for some of you who registered for this webinar, you would have attempted the survey already when you first sign up for the webinar. But for those of you who have not actually done this survey when you sign up for this webinar, I really hope that you can do me a favor, help me by filling in this multiple choice survey, which will just take about 2 minutes of your time, so that we can understand the kind of things that you would hope to learn, as well as the things and the tools that you will hope to see in TraderWave, so that we can actually build it for you to help you become a more proficient and profitable trader in time to come. Okay, so as you could be seeing, my colleague Gladwin has shared the link in the comment section. So just please help me fill in the survey, and in about 2 minutes time, I will actually start tackling any kind of questions that you might have for me based on today's webinar session. Okay, so I'm just gonna switch over right now. Okay, so I hope you can see me. So let's just please help me take 2 minutes of your time to help me fill in this survey so that we can help you thereafter. And right now, I will just quickly run through what are some of the kind of questions you might have for me. I still have about 10 minutes to answer your question. So let me just take a look at all the questions that's being asked while you fill in the survey for me, all right? Okay, and any one of you who have questions, just feel free to type in the comment section also. I'm currently looking at the comment section, so if you have any questions for me about entries, about stop loss, about profit taking, just feel free to type in the comments right now. All right, so from Edwin, okay, Let me just look through the question first. I'll take another 1 more minutes, then I'll start answering questions. Okay, I have one very interesting question from Edward. Okay, one question from Kenneth. I've seen your question, Kenneth. I will answer that shortly. And yeah, I've seen your question as well, Qin. And okay. Trinity, I've also seen your question. I will address it as well. So I'll probably just address, I think I will only have time to address about 4 to 5 questions max. So anyone would want to put in the last question for me to attempt before I close off the Q&A session and start answering the questions formally. All right, so I hope that you have actually helped to answer the survey, and I really appreciate your help in answering the survey, because that will help us greatly in delivering more value to you as a trader in terms of the tools we build and in terms of the kind of trading knowledge we could potentially share with you in future blog posts as well as future webinar. All right, so I'm going to start addressing the question right now, and the first question is from Edward. How to take profit on all those all-time high stock? Should I be using FIBO, or should I be based on the last 2 days lower bar of 1 pip lower? Okay, so generally, if it's a stock that has gone on to a new all-time high, okay, usually what I will do is, I do not use Fibonacci level, okay? In fact, most of the time, what I will do is I will look at I can't actually draw it over here, but I will actually observe previously the kind of similar swing that has happened in this stock when the key break happens to a new all-time high. How long did it actually run before it starts to pull back? All right, so I'll base on the personality and the characteristic of this stock in similar situation that has happened in the past to determine when it breaks to another new all-time high again, how far likely is it likely to run to? All right, so if that is one way of using that. Otherwise, I'll be looking as well on the next key psychological round number and probably determine as where it could potentially to be. And again, there is no right or wrong answers, but it is based on some assumptions that you might have. All right, so another way, if it goes to a new all-time high, is very easy. Just based on the risk reward multiples and then fix it over there. And meanwhile, be very focused on your stop loss. And if it touches the stop loss, please get out of it. All right, so next question. I hope I answer your question on that, Edward. And next question by Kenneth. How do you actually determine a setup will break up or break down? That is an absolutely great question. So whenever I see a potential setup that has not happened, a breakout, or has not given a clear bounce yet, what I will do is I will simply wait. Okay, I will simply wait for the price to either break up or break down. Then it tells me that there is a higher probability that the price will continue to move in the direction of that breakup or breakdown. All right, so my simple answer to you is wait for the breakout to happen. Don't try to assume whether it's going to break out, or is it going to break up, or is it going to break down. All right, so we react in terms of price action trading strategy. We usually try to react to the key thing the key event that has happened. All right, so again, wait for it to show before you decide whether to get in or to get out. And from Chin, so you watch your watch list of 100 stocks every day to see for the setup. Well, that depends on the trading horizon that you have. If you are a very short-term swing trader, which let's say typically your holding time frame ranges from about 1 week to 2 weeks, yes, you got to look at the watch list every single day to look for ideas. But if you're generally a longer term swing trader or a longer term position trader, then you don't actually have to keep on looking at the stocks to find ideas, because it doesn't come as often, so frequently. So another way that will really help, for example, is that if I have a watch list of 100 stocks, that's the reason why we're actually building the technical alerts now. So for example, if I have a watch list of 100 stocks and I don't have the time to come in every day to look at them, I will actually set an alert, for example, on the trend line or on the support resistance level where when the price goes above, it is very likely that the trade will start to emerge from there. So for example, if I take a look at a stock and I notice that there's a key resistance at $1 and the current price is about 98 cents, I will place an alert on that $1 level and says, alert me if the price crosses this $1. So once I put that alert, I don't have to keep on coming back to see if the breakout has happened already or not. I can simply wait for the alert to notify me so that when I receive a notification that says, okay, this stock A, the price has just crossed $1 and I know $1 is the key resistance I'm watching out for, then I will just quickly go into the chart and see whether that break is substantial enough. And if I think that the break is substantial enough, then I will start to plan for the trade entry from there. Okay, so if you do not really use technical alerts, then there's no other way but to really manually screen through the stocks that you have. Okay, if you're a short-term swing trader every day, if you are generally a longer-term trader, then you can afford to do it once every few days. But trust me, as you do more and more of running through and screening through your watch list of that whole list of stocks, you will build up a competency of recognizing patterns and noticing when some trading event is about to happen. And that usually have to come from experience. All right. So my suggestion is, if you have the time, try to do it. Okay. If not, try to use tools that has alert to help you, help notify you when trading events happen at about those key levels that you're watching for. All right. So next question from Trinity. A lot of these technical trend trading techniques are more relevant for swing traders. Does it apply for long-term investors as well? That is 5 to 10 years horizon. Well, as you can see, some of the charts that I have shown you earlier on, some trends do last multi-years. Okay, it could be 5 years, it could be even up to about 8 years to 10 years. So generally, if you're a really long-term investor, definitely technical analysis or trend trading is still helpful. Except that instead of looking at shorter term trend lines, you should be looking across multi-years, about 5 to 10 years. Where is that key uptrend line that it has been forming, or where is that key downtrend resistance that it has been forming? And then if, let's say, for example, you are in a stock or you want to get in the stock to hold for the long term, make sure that it's starting to reverse towards the upside, or it is already on the upside that has a clear uptrend already. And then once you get into the trade for a long-term perspective, just make sure that uptrend line is not being violated. Just keep on tracking it. So in a way, position trader, your exit level is based on trailing stop. So as long as the price is going to go higher based on that generally long-term trend line that you're looking at, as long as it continue to go higher, there's no reason for you to get out of that trade. Okay, you should only get out of a trade from a long-term position trader perspective only when the price cross below that key uptrend support that you're looking at. All right, so I hope that answers your question. And finally, the time now is 9:30, so I'll just answer one last question from CK. Hi, Philip. Does the stop loss at near support level works well during earning periods? So generally, my suggestions is try to avoid, getting into a stock or getting into an entry when a stock is going to announce results over the next 1 to 2 days, okay, or the next 1 week, because during results earning there is uncertainty. All right, so there's uncertainty, expectations could be as such, and then if the results is not, then it becomes there's a sudden gap down which might even cross below your stop loss level, or there could be some event that makes the price volatility very high. So my suggestion is try not to get into a stock if it's going to announce a result soon, unless you are a really short-term trader, then it doesn't matter. So for example, if you're a swing trader that holds your position over 2 weeks to 1 month, then try not to get into a trade where you know that the company is going to announce results within the next 2-3 weeks. All right, and at the same time, also try to avoid situations when the stock is about to go ex-dividend. Okay, and if you are not aware that it's about to go ex-dividend, and you place a stop loss at a level, and then the ex-dividend, most of you should already know by now, during ex-dividend, the price usually will gap down lower the amount of dividends that is being paid out. Okay, so if you set your stop loss at the level and the dividend payout is actually more than the stop loss level that you have set, you will suddenly see the price opening lower below your stop loss, and you get stopped out for no reason, purely due to the reason of a dividend payout. All right, so do take note of when dividends are paid out. And if you want to get into a trade where dividends are going to go X soon, make sure you factor your stop loss into the element of the X dividend amount. All right. And in fact, in TraderWave app, which will be launching very soon, is that we will provide a dividend tracker. So on your chart, you'll be able to see exactly which are the dates that a dividend is going to be go X. Okay, and as well as showing you the dates of when a dividend has been announced, when it's going to be payable. And as such, you'll be able to know before you get into a trade, you will know whether the X dividend date is going to be near and whether you should factor the dividend amount, the X dividend amount, into your stop loss distance. In fact, we will also be building technical alerts into the dividend tracker as well, so that you can receive a notification. For example, notify me 2 days before X dividend. Okay, so that you can be aware and you need to see whether how you should manage your trade differently if the X dividend, if the stock is about to go X dividend soon. All right, so just look out for it. It should be launching within the next few weeks on this dividend tracker and allowing you to potentially set alerts on it. All right, so the time right now is 9:32, just nice. I finished answering 5 questions and I'm sorry I can't answer more questions. In the future, I might even write blog posts about all these questions that you might have to answer of this question. Okay, so that's about it from me for now. And I hope, and I'll be planning for the next webinar, and I'll let you know the date soon. So I hope to see you joining me in the next webinar to learn more and to interact with me as well. So I hope you enjoyed today's session, and I hope to see you soon, and take care. All the best.